Right now is the best opportunity Canadian investors have had to buy oil and gas stocks. But all you are hearing in the media is fear, uncertainty, and doubt about this industry, about the Canadian economy in general. In today's video, we're going to talk a little bit about why I think today, right now, in February of 2025, is one of the best opportunities for Canadian investors to step into the Canadian oil and gas space. And we'll talk about what has made this such a special opportunity. But first, I want you guys to tell me what is the same, what do you notice about all of these headlines? Now, I'm guessing you're going to notice the same thing I do. Pipelines are on everyone's mind right now. There has never been a time in my life that Canadians across this country have been talking about the pipelines and infrastructure needed for our energy sector. In fact, the last time we even had a major national conversation about this topic, where it was sort of in the political media and people were thinking about it, the consensus amongst the majority of Canadians who weren't directly in this space was negative. Those people believed that pipelines were bad, the energy industry was bad, and they wanted it to stop. They wanted it to stop growing, and they wanted to focus investment on other spaces. Well, fast forward to 2025, and that is no longer the case. In fact, we have seen First Nations groups in British Columbia and the Environment Minister of Quebec both on side with building new energy infrastructure in this country. Now, obviously, most of this comes thanks to the drama with the United States, and that drama needs to be addressed. Because obviously, any of us who own these companies, the Enbridges, the Cenovus, the Canadian Natural, the Suncor, the Imperial, the Tourmaline, any of these big oil and gas companies, we're exposed to US markets. And right now, it doesn't seem like the Americans really want to be our friends. Let's be honest. All of the stories are dramatic, chaotic. It puts a huge damper on this industry. But if you think about what has held these companies back in the last 10, 15 years, you're going to be immediately thinking about America, about shale oil, and about the differential. And that is the key element of today's video. Because for probably the first time in my life, there is a real chance that Canadian energy could erase the differential between WCS, Western Canadian Select Crude, and WTI, or the worldwide average crude price. That differential has represented a $10 to $15 a barrel discount. And if you think about that in terms of percentage, you're thinking somewhere around a 15 to 20% discount on all Canadian energy exports down to the United States, which is, of course, the majority of Canadian energy. If the political consensus can last for just a moment, just long enough for a couple of companies to take the step towards creating these projects, put forwards their plans, advertise this as a Canadian energy dominance plan, right? You could get approvals of real, actual new pipelines going to the coasts, and you could get a $10 to $15 a barrel increase in the price of WCS in contrast with WTI. Why should you care? If you're looking at some of these Canadian energy companies, take someone like Canadian Natural, one of the biggest producers of Canadian energy. You're thinking about, okay, they're quite profitable. They've expanded quite quickly. But where's the future? Where's the potential? What justifies the PE? Well, now imagine if they could suddenly drop, let's even say conservatively 15% straight to their bottom line. You would see a massive jump in that stock price. To hold the same PE ratio, to hold the same valuation on that company, you would see a massive jump, an equivalent 10, 15%. But that wouldn't be all. Because if Canada could export our crude to the world markets at those kind of prices, there's all of a sudden an argument to be made for expansion in production, for these companies that have been sitting there. Think of Tourmaline, who's been sitting there preparing all of these wells to be drilled. They're ready to start producing. They just need to wait for the opportunity. Well, all of a sudden, all that production can go online. And revenues can grow like they did in the early 2010s. We could see another massive bull run in this industry here in Canada, all because it's being threatened right now. And so you're being hit with a double whammy where the stock price is held down and the future potential is rising. There has never been a better time to be investing in Canadian oil and gas. All you need is a long-term focus. You need to be willing to ride out the uncertainty. And when the new projects start coming online, when the proposals are made, when the approvals are made, you are going to see these stocks reward you massively. So this is the video. That's my message for today. I seriously believe that right now is the best opportunity investors have had to buy Canadian oil and gas. If you enjoyed this video, if you like talking about this kind of thing, please do subscribe to the channel. I did a video talking just in December, early January, about why it was such a great opportunity then. I think it's even better now. I think we're in an even better spot. I think it's been massive how this industry has moved. I think the news, while it seems scary, while there is definitely fear and uncertainty, I think the news is going to put us as investors in probably the best position we've been in for as long as I can remember. And with that being said, I hope I catch you in the next video.